Closing costs are a big topic when people are buying a home. What gets lumped into there sometimes, there's closing costs and there are prepaids in our technical world. Closing costs are things like government recording charge, title fees, appraisal fee, origination fee. Prepaids are things that happen with a house that even if you were in the 50-year mortgage, you would still have to pay. Daily interest, home insurance, property taxes. But those get lumped together, and that's okay. So let's talk about it. How do you pay for closing costs? Well, one is you can just write a check from your funds that you have. Another way is you could ask the seller to pay for them. Now, please know, in my opinion, that's a creative way to put them into your loan. You're making an offer on the house at a certain price, asking the seller to pay for them, which in their mind, they understand that they still have a net that they need to make on their house sale. So, but it ends up in your loan because your down payment is based upon the purchase price. A third way that most people aren't aware of is, let's take an interest rate. A lot of people know you can buy an interest rate down, you pay points. But what they don't know many times is that you can actually take a higher interest rate and the lender will help give you a credit and they'll help pay these closing costs and prepaid items. No, but please know this option's not for everybody because even in the seller paid for them, there's a return on investment there. And especially on the lender one, if they pay for it, you're taking a higher interest rate for the life of the loan. So we just need to talk about what's your situation and what makes the most sense. Another thing about closing costs is people are like, oh my gosh, closing costs are so much. But whether you're buying a $100,000, $300,000, or $1 million home, let's think about something. Let's just use $100,000 for easy math. Give or take $500, closing costs and prepaids are probably around $4,000. That's 4% sales tax if you use that term in comparison. Imagine if you went to the store and bought something, I don't know, even for 10 bucks. You're going to pay 5.5% sales tax. If you bought it for $100,000, you're going to pay 5.5%. That's $5,500. You actually see it's actually cheaper to buy a house than to maybe go buy that pack of gum at the store where you pay 5.5% interest. And you're buying a home. My name is Richie Bauman, Providence Home Lending. I'd love to chat with you to see how these things make sense for you. My phone number and contact information is about to appear at the end of this video.